Our top story today, stock futures are selling off here after a weaker than expected July jobs report. We did see a leg lower following that print here. The unemployment rate rising to its highest level in nearly 3 years, coming in at 4.3% and triggering the so-called SOM rule, which signals the start of a recession, with the 3-month moving average of the unemployment rate rising by half a percentage point from the previous year. Here to discuss today's print, we want to bring in Josh Schafer. And Josh, when you take a look at this number here, one of the concerns, risks heading into this print was that it was going to be much weaker than expected. Of course, that then begs the question what that means for the Fed, whether or not they were behind the 8-ball. But what's your read on this print?
Yeah, I mean, I think the headline is just the unemployment rate, right? The unemployment rate not just ticking up to 4.2%, but ticking up to 4.3%. There was some math that you would have had to do on the SOM rule. If it was 4.2%, 4.3 kind of gives it a clean break, per our math wizard, Jared Blickery, our fellow markets reporter. But I think the broad takeaway from economists instantly seems to be, if you were even considering that September wasn't going to be a cut, the Fed is very, very, very likely to cut in September now. You look at something like the CME Fed Watch tool, which has futures on sort of where people are placing their bets on how much the Fed is going to cut. That's now up to a 70% chance this morning that the Fed cuts by 50 basis points in September. To note, that was 5% a month ago. So the narrative has it feels like it's fully flipped basically since Chair Powell stopped his press conference on Wednesday to now, with the economic data points that we've had in the past couple of days. The 50 basis point conversation was not a big conversation going back a couple of days. Now this print adding to some data that we had out yesterday in terms of manufacturing data and jobless claims data, sort of building that case for maybe the first cut will be a bit deeper than people had expected.
I mean, even if it's not as deep as they might be pricing in or expecting, what does that, though, say, the shift in probability say at least about how much room they have to work with in a cutting cycle that would be initiated?
Yeah, Brad, I mean, I think that the thing to focus on here that we're getting back to is the why, right? Why is the Fed cutting? And that's something that strategists have been telling us on this airwaves for really 6 months now, right, is to keep remembering, yes, you do want rate cuts eventually, but the key is why. And the why has sort of started to shift here, because they might be cutting because they're more worried about what's happening in the labor market than actually the trend in inflation. And that's going to be sort of the key thing to focus on. And I think also worth noting, as we talk about this July jobs report, we're talking about the September Fed meeting, we do get another jobs print before that, right? And we do know that sometimes this data can shift month to month and not necessarily tell the exact same story. And I think once we zoom out a little bit, that's going to become part of the conversation too. Is the BLS said here that Hurricane Beryl didn't necessarily overly impact their survey. They're going to release data later this month to give us a better look at how it did. But some economists are speculating it might have impacted it a little bit. You also had a tick up in the labor force participation rate, which normally when that happens and the unemployment rate goes up a little bit, economists sort of reason more people came into the workforce, the unemployment rate going up isn't totally bad. So there is nuance here with the print. But I think just after yesterday's market action and people being worried about bad economic data, you've got a lot more bad economic data this morning to look at. So I think overall, it's not shocking to see the market action that we're seeing.
And Beryl was just the B name in the hurricane season, which runs through November. So
there's more to come, Brad.
Yeah, we'll see if they have to put more updates like this in their report and the employment situation. Josh, thanks for breaking this down for us.